Hey everyone, and welcome back to Everything Tesla Stock. The global economy has been unstable owing to the effect of inflation and the pandemic. This is not only a problem for developing countries, as even world-leading countries like the US have suffered the result of the harsh economy in the past months. To cushion the effects of these factors, there is a need to either cut costs or create other means of increasing income, possibly by investing in the stock market. However, not every stock is a good buy, and not every stock is good for the long term. Luckily, growth stocks like Tesla could be what investors need to make a lot of money in the future. Why is Tesla stock something you should consider? Let's find out. Before we start, if you like this type of content, make sure you hit the like button, subscribe to the channel, and turn on notifications to keep up to date on everything happening with Tesla. Tesla is a leading electric car company, with its market spread across different countries globally. The EV market has a goal of facilitating the world's transition to sustainable energy, and it's made incredible efforts to achieve this. According to Tesla CEO Elon Musk, maximizing the use of technology will help achieve a better future for humanity. Since its founding, Tesla has continued to trail the path of innovative technology, and will likely do so for as long as it can. This is, no doubt, what has made it stand out amongst other EV companies. Musk recently disclosed at an energy conference in Norway that Tesla is set to launch self-driving features for its car later this year. The Tesla CEO added that if all necessary approvals are obtained, then the tech could be released in both the US and Europe. Musk believes that Tesla will eventually incorporate the self-driving feature into its EVs, stating that Tesla's ability to do so is the difference between the company being worth a lot of money or nothing. So what does this new feature mean for Tesla, and by extension, its stock? Keep watching to find out. The self-driving feature, which is a new innovation and a new version of its driver assist software, will cost more than the previous one. Musk revealed that the new feature is going to be about $15,000 in North America starting from the 5th of September. This is $3,000 higher than the older version, which cost $12,000. Although this may come at an extra cost for Tesla users, nonetheless it is a good way to optimize user experience and generate revenue for the company. Likewise, since many Tesla car owners have made positive comments on this feature, more users are likely to opt in for it. Tesla believes that self-driving beta software will eventually enable autonomous driving for its car users. Also, Musk announced the upcoming second generation of Starlink internet satellites, which offers cellular antennas for connection with smartphones from T-Mobile in the US and other operators too. He added that these connections are going to work with Tesla's electric cars. If Tesla does successfully pull off these projects, the increased demand for its products and its price hike on its software could be a huge catalyst for the company's growth. Likewise, an increase in Tesla's car sales and revenue will all have a positive impact on its stock performance. Although investors could worry about their investments in the long term, there is little or no reason to worry. A company's stock performance is largely dependent on its long-term market potential rather than the short term. Also, Tesla dominates 26% of the global battery electric vehicle market and performed incredibly in the past years. The EV company recorded total revenue of $16.9 billion in its second quarter this year, which is a 41.6% increase from the last figure. Similarly, its adjusted earnings per share had a 56.6% increase, surpassing consensus forecasts by 26.9%, and that shows that the automaker is set to meet and surpass analysis price forecasts for the future years. Seeing that Tesla has concluded the last quarter with the highest vehicle production month in history, despite the plunging market conditions, it's safe to say that the EV company can successfully overcome future market hiccups with impressive financial figures. Likewise, several stock investors and analysts have made bullish comments on the stock. Big names in the stock market like Cathie Wood have also revealed high stock price predictions on Tesla. ARK Invest CEO Cathie Wood recently set a price target of $4,600 on Tesla by 2026. According to the investment expert, Tesla's expected robotaxi could potentially see Tesla's stock price skyrocketing in the future. Wood believes that the robotaxi business will yield more than half of Tesla's expected earnings before interest, taxes, depreciation, and amortization are considered. She also added that the business could account for 62% of its entire enterprise value and 34% of Tesla's total revenue. Considering the volatility of the market, Wood stated that a bearish scenario, Tesla shares could be seen to be worth $2,900 in 2026 and about $5,800 in a bull case scenario. The ARK Investment CEO expects that Tesla's revenues from the electric vehicle business will comprise 57% of the automaker's total revenue in that year. Cathie Wood does not seem to be the only stock expert who's interested in Tesla. Other investors like Kevin O'Leary and John Peterson have also revealed that they're bullish on the stock. Kevin O'Leary is a Canadian businessman, entrepreneur, and a one-time Tesla bear. However, following a disclosure from his son, O'Leary revealed that he had bought some Tesla shares and made over 1,000% on his investment. The stock investor added that Tesla is not only a car company but also a data company. Although the recent event of O'Leary selling his Tesla shares may have portrayed him as a Tesla bear, the TV personality seems to have a reason for his action, which is not at all bearish on the stock. According to him, he holds a maximum allocation of 5% in any individual stock, and when the stock goes up and passes the 5% allocation, he sells. This is quite evident since O'Leary has sold his shares after an increase in Tesla's share price at the time. Similarly, Wall Street Analysis forecast Tesla's total revenue to reach $84 billion, with earnings adjusted per share of $12.46. Also, Canadian clinical psychologist and author John Peterson had rated Tesla stock as a strong buy for investors. It's not surprising that these stock experts are bullish on Tesla. The EV company's outperformed its competition in several ways, especially by accelerating its car production and delivery. The electric car maker produced a record of 305,407 vehicles in the first quarter of the year, and delivered 310,048 to buyers. Despite the production and delivery decline from the previous quarter, owing to continued supply chain restraints and production hiccups at its Shanghai factory, Tesla still recorded about 26.5% of an increase in its car delivery, a record most of Tesla's competitors are going to struggle to see. Aside from the many projects unveiled by Tesla's CEO, investors believe that there are several other projects that are yet to be revealed by the automaker. In recent news, Tesla announced its latest virtual plant to be opening in Japan, which is the largest commercial virtual plant in the country. According to Musk, the company has been installing its Powerwall batteries in homes since 2021, and now has over 300 of them installed. The EV company also has virtual power plants operating in California and Australia, and is working on getting another one opened up in Texas. However, it is noteworthy that every company has its market challenges, and stock prices tend to fluctuate following these market irregularities. So, there are likely to be a few times when the numbers will run into the negatives. The good news is that a stock like Tesla is a good one to watch, and it's sure to bounce back. According to Musk, one of the biggest challenges the world's ever faced is the transition to sustainable energy and a sustainable economy, and this will take some decades to complete, so Tesla's market challenges are only expected for a company aimed at providing sustainable energy. Luckily, while these major headwinds have prevented the company from reaching its full potential in the past quarters, Tesla's still managed to exceed expectations and achieve massive growth rates. Tesla bulls believe that the best days are yet to come for the EV company, and this is likely to be a true story, since many of Tesla's innovations and projects are yet to hit the market. Tesla has set up strategies to mitigate the effects of market hurdles like inflation by increasing the price of some of its EVs. Similarly, the company also aims to ramp up production by building new gigafactories across multiple locations globally. When Tesla's major market hurdles finally clear up, the automaker may be well on its way to massive success. The EV maker is also one of the most valuable companies in the world, worth over $700 billion. With more efforts on strategy, Tesla is sure to supersede investors' expectations. Therefore, considering Tesla's long-term market potential, and the fact that Tesla shares are currently going for a lower price following the recent 3-for-1 stock split, this may be the right time for investors to get some Tesla shares in their portfolio. What's your take on Tesla stock? Can the high yield return for investors in years to come be a really good one to watch? Let us know in the comments, and while you're still here, go ahead and click on one of these two videos on your screen. See you there!